So you talked about the Build Back Better plan.
Mhm.
So I know the taxes proposals are changing each week. Could you give kind of like a summary of what's on the table right now?
Yeah, actually, it's really kind of interesting. And of course, keep in mind that what's on the table right now might be different than when we talk about this again next week. It seems like we've been talking about this every week. And again, it's because it comes up as questions. I think it is important to have some idea for what's happening so that you could, at least think about in advance some of the strategies that you might use. So, for example, at one point in time, they were talking about essentially eliminating, for the most part, Roth conversions by the end of the year. That's off the table right now. So that's not going to change. So, which I think is great because I still think that's a very powerful tool for some people to use. They were also talking about getting rid of stepped up basis. So if you bought a house, you know, for 160,000, that's now worth 2 million, some crazy number like we've seen here in this valley. And you pass away, right now, your kids would get a stepped up basis. So they would get it at $2 million basis, which just means if they sold it, they'd have no capital gains. And if they got rid of the step up, then that means that they would inherit your basis at 160,000. Then if they sell it, so it's a huge deal, especially a big deal for like big farms and things like that, which is super difficult to deal with, without a step up. So that's gone too. They got rid of the corporate tax increase. They got rid of the capital gains tax increase. They got rid of the increase on the top bracket. The top bracket right now is 37%. They wanted to move that to 39.6. That's gone. Okay, so those are all gone. So what did they add? Well, what they've got is that they've got a 15% essentially minimum tax on companies that have more than $1 billion of profit. So one of the problems we've seen is that some of these really big companies are able to use so many write-offs that they're not paying really any tax. Even though the corporate tax is 21%, they're ending up with next to zero. And so what they're saying is that you'd have at least a 15% tax only for really big companies. And so they're expecting to get some revenues from that. We'll see how that works out. Then the second thing is they're going to tax stock buybacks. So like Apple, I think they buy 100 billion a quarter of stock and are taking it off. And that's, from a financial engineering standpoint, one of the things that happens to stock buybacks is, you're shrinking the supply. If the demand stays the same for your stock, the stock can go up. And so they keep buying it back. They're now talking about a 1% tax on those buybacks. I don't think that'll be enough tax to stop these guys from doing it because when you look at the financial engineering portion of it, I still think the buybacks will happen. And yet it'll generate some income, so that's not terrible. Then they're talking about that if you make $10 million of revenue or more, you will pay an additional 5% tax on the revenue above that. And if you make 25 million or more, you pay another 3%. So a total of 8% on incomes above that. So they're going after very big earning situations as far as that goes. And so, again, I don't want to get political with all of this as to what they should be doing or not doing, what got cut out, what didn't get cut out. But from a stock market standpoint, the adjustments that they've made are good things for the stock market. They may not be good things all together, depends on your opinion on what's out there. But altogether, what we're seeing right now is kind of fascinating what they've settled on. Again, we'll see, for a while they batted around this billionaire tax where they would tax your unrealized capital gains. Uh, I think that's kind of a nightmare because you've got something that you haven't sold and yet you got to pay a tax on it. How would you get the tax other than now selling some? And if that's a big family farm or something, good luck with that. So again, I think that, maybe that was uh, canceled for a good reason, possibly. I think what they've got right now seems kind of reasonable. We'll see how it actually works out as far as that goes. But um, very, very interesting how that's played out because we went from, all of this talk about things that we might be doing for capital gains. I mean, if they increase capital gains to nearly 40%, man, you might want to sell your house sooner than later, that kind of stuff. Now it's no change. So that helps. I think that's better.
Yeah, my big issue with the unrealized gains is it's weird if if you're a billionaire that inherited $1 billion, then you have that stepped up basis, so you don't have to pay taxes on it versus someone that maybe made a company that is $1 billion company and then
Yeah.
they have that. So it's kind
Yeah.
of interesting how unrealized changes the thing.
Oh, it was really fascinating too because they're actually talking about not just like going forward. So if I had a billion and it was worth 1.1 billion, I would pay taxes on that growth. So that okay, I get it. But they were also saying that we're going to go backwards. Look at that first billion and or 10 billion or 20 billion or whatever it is, and they were going to tax you going backwards for the cost basis. So if your cost basis was 1 billion and you had 10 billion, you're going to pay taxes on that $9 billion. They were going to spread that tax over 9 years. And again, it's hard to sympathize with billionaires, as far as that goes. But it just seemed really sloppy to me in a very strange way. What they're doing now with taxing high income, that's much easier because valuing things can be difficult too. It's one thing to go to somebody, who has just publicly held stock, but what if it's privately held stock, or what if it's a farm, and what's it actually worth? And so that and then if there was a decrease in gains, you would actually get money back. You get a write-off. And so if we had a massive downturn in the stock market, for example, all of a sudden all these billionaires would be getting massive write-offs, which at a time when the government's actually trying to collect more money, because usually you have more going out in those downturns, they're going to be collecting less money. So again, I just didn't think it made sense in totality for what they were trying to do there. I like better what they're doing. I especially like this minimum tax. What we're starting to see now is they're trying to get this global, essentially minimum tax in place, this 15%. I think that is, the writing's on the wall there. I think that could be a good thing as a whole. Try to keep that as a more even playing field. And so anyway, that's, it's hard to blame companies for trying to maximize what they're doing and pay the least amount of taxes they can. But at the same time, it would be nice if everybody can kind of pay some share. So we'll see how that works out.